Hi, this is Zach Meir with the rather earlier than usual edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 24th of January. Starting off with the FTSE 100, but looks as though it's ending the week on a decent note. We're higher than the recent high there, around the 85.20 level, and basically what I call a rising bull flag. So it's so bullish, also strong the price action that we don't even have down moves or within that flag. Initial target 87.20. Best case up to 9,000 perhaps by the end of next month, the way things are going. Ideally, we stay above the old May resistance, intraday peak 84.74, whatever happens. Moving on to the DAX, and here the situation is that we managed to exceed the top of that rising trend channel, the black channel there from the autumn of 2023. Now we're expecting this market to climb up the red rising trend channel from October. That's heading for just shy of 22,000, which we're looking for by the end of next month, or even sooner. Ideally, we stay above the recent gap floor, the latest gap floor this week, at 21,000 in the meantime. Moving along to the Dow, and here we've recovered ourselves quite well after the bounce off basically November support. Bear trap, gap reversal, pushing through the rising 50-day line and heading for the record levels again towards 45,000, but looking for up to 46,400 by the end of next month. And that's valid while we hold above that 50-day line, 43,600. Onto the market, which is perhaps the most exciting one at the moment, and that is Bitcoin here, right within this range, which is the floor is there at the 50-day line there, 98,600, and the top, that resistance line projection from April around 109,000. Through 109, we're looking for around 122, which is the upper parallel of that April line from March. On the downside, hoping that any rug pulls or tests for support won't go any lower than 98,000 at the 50-day line. Worst case, there has to be another test of the 90,000 area, but I think after that bear trap rebound that we had on the 13th of this month, it looks as though this market is ready to have a proper go at a higher push to the upside. Onto gold, and here we left it well yesterday, still above the old, basically post-October resistance around 27.50-60, while we're above that, obviously looking for the record highs through 2800, and hopefully maybe by the end of next month up to 29.60, which is the top of that rising trend channel from last February. On the downside, the worst case, I suppose, is 27.20 at the moment, the broken October resistance line. Moving on to the stocks, and Burberry, not the type of stock we normally look at, but I've looked at this before with the crawl that we've had up the floor of that rising trend channel, and actually the way that supports come in wholly above the 50-day line since the middle of October. Current situation, obviously, we've gapped higher and gapping towards the top of that rising trend channel as high as £15.30. Maybe we'll see that by the end of next month. Any dips, I suppose, towards the old resistance on the way down, so that's the 10 to £11 zone, would be buying opportunities. But after today's spike, doesn't look as though we're going to get that, especially with the update that was also delivered today. Moving along to Cell AI, which has had a lot of coverage here in the recent past. You can see why from the chart. We've hit our, we've blown through our second target there. We've got the third target there towards 0.6 pence. Hoping for that over the next few days. And then obviously we've got the old 2024 resistance through 0.7. But let's see if we can get through to 0.6 pence while we're above 0.4. The other point to note is that the 50 and 200-day lines are both rising. So we're going to a golden cross. And that tends to be the strongest part of the cycle, which is obviously what we're already seeing. The rally started with that gap to the upside off the low, which is one of our favorite setups anyway. ImmuPharma, which has been newly revamped with its autoimmune disease news, is next. And here you can see that after breaking through the old resistance zone there between 2.5 and 3 pence, we've established new support there. And we're trying to chase that resistance line, the red one there, from early 2023, heading for 5 pence. Hopefully we'll get that over the next couple of weeks and stay above recent support around 3 pence. Mindflair is also revamping itself with a couple of investments, etc., etc. We're near the top of the range there, around 1.6 pence, and we're looking for that red line there, the top of that channel, hopefully over the next few days. After that, the next level up would be up to 3.25 pence, which is a early 2023 resistance line projection. Upside value while we hold above the 1 penny area at the moment, or in the meantime, rather. Director buying's helped mobile streams. 3 directors wading in there. We've got this steep rising trend channel, bounced off 0.35, and looking for the top of the channel there, hopefully towards the line I'm just adjusting at the moment, so that's up towards 0.65. Maybe we get that by the end of next month while we're above the 50-day line, 0.37. Moving on to Physiomics, and here you can see that we've broken through the top of that rising trend channel base. That was around 1.1 pence above that. We're looking for 1.7 pence, perhaps by the end of next month, which would take us back to the 2024 resistance area. But the key here, staying on the right side of a penny, I think, for that situation. Moving on to Pulsar, where I suppose we're still waiting for big news, but here the share's right in the middle of the range. They found support at the top of the gap there from back in December, which is normally a decent continuation signal. Gives us the impression that at least while we're above 26 pence or 26.5 pence, we'll have a retest of the best levels here, 33 pence, pretty soon. Finishing off with Rome Resources, which has been a bit of a head-scratcher in terms of not responding to quite decent news that the company's put out. We've got a rising trend channel here, based just below the 200-day line at 0.3 pence, and it looks as though the stock uncomfortable below 0.3 pence, at least while we're above 0.3, looking for a return to the mid-30s. Obviously, that's news dependent. That's it from me today. More updates over the weekend.